Okay, good morning everybody. Let's get started. All right, starting off in the US, we had jobless claims that came out at 265, which is quite a bit less than expected, so a good number there, which buoyed the market. The S&P ended up about 19 points, which was a welcome relief from sort of heavy sell-off that we had from the previous 2 days. We also had pending home sales for December, which dropped by 3.7%. Stock-specific stuff, McDonald's saw some new highs on news that its CEO is to retire in March, so obviously they didn't like him too much. And then Amazon.com, which rallied strongly after posting strong fourth quarter results. All right, in Asia, mixed. Shanghai down a little over 0.4%. All the rest looking okay, nothing spectacular, just up marginally. Sort of more interesting news there. Alibaba fell sharply after releasing a disappointing quarterly review, and SoftBank in Japan obviously fell on the back of that. If we look at stuff that will affect our market, we had Billy's, which was up 1%. So we might get a little bit of relief out of Billy's in our market, and then Tencent, which was down 2.5%. So expect Naspers a little bit off on the open, but Naspers has been trading quite well compared to Tencent over the last few days. We definitely had a buyer in our market, so we may not reach that full 2.5% downside right off the bat. If you look at our chart of interest today, it's a chart from Eaton Vance, just showing how traders with poor risk management are pretty much doomed. I think we all pretty much know these figures, but we don't actually often realize it. And sort of in the world of gearing, these losses can mount up pretty quickly. You can see, like, if you take a 50% loss in your trading account, you actually need to make 100% to make it back. And then I think often when guys go down that much, they try and chase it and try and make it back quickly, and obviously that just leads to more losses. If you take a 90% loss in your account, you need 900% to make it back. So obviously, you really need to have your risk management in place before you want to trade geared instruments. All right, corporate action today. We have MasterCard out of the US, Chevron, and Altria Group coming out later. And then the key factors, we had Japanese CPI, Japanese industrial production, German retail sales at 9. At 12 o'clock we have Eurozone unemployment rates, as well as CPI estimate. We then have trade balance out of SA at 2 o'clock. And then at 3:30 out of the US we have annualized GDP quarter-on-quarter, Chicago purchasing manager, and University of Michigan sentiment. All right, so let's jump into the charts quickly. All right, the first one we'll show is the S&P. Looks like we've been working at a little bit of a range over the last 2 months, with sort of this 1990 level being the bottom end of the range, and I would say approximately at the moment it's about 2057 on the upside. Obviously that line is moving downwards, so we're going to keep an eye on this band. The breakout of on either side of this could get interesting. We've got the 200-day moving average just below there at 1980, which may provide a little bit of support as well. On the Aussie, I think we showed this the other day, or Joe showed this the other day. We've recently broken out of a bit of a consolidation here, which is quite interesting because it shows quite a higher target. If we zoom in a little bit, we're looking at a target of between approximately 2,500 points. So we're looking at close to or just over all-time highs. As a result, if we can hold this trend line, we're going to be looking at this trend line also moving downwards, right at the 200-day moving average, which is around about 44,800. So just below where we're currently trading. If we can hang on to this level for a few sessions and maybe push higher, it looks like there's a good chance that we could go and retest those highs in the short term. But obviously, this market is volatile, so we've got to really stay nimble. Next one I wanted to show was Netcare. Netcare has been trading in a very tight band over the last little while and had some really clear resistance here at 38. Yesterday it broke through. It actually gave a lot of that back sort of in the last half an hour of the day when the S&P started coming off a bit. But nevertheless, a breakout from a very clear level. These are the stocks. These are the kind of breakouts you want. You're looking for a stock that's in a clear uptrend, just like Netcare. Spends a little bit of time consolidating at a level. And then breaks out. These sort of are the best setups. Obviously, we still want to stay nimble. If it breaks below 38, probably want to be out. But anyway, the range is about 2 Rand, so we're looking for a short-term move to about 40 Rand on Netcare. Next one I wanted to show was RMI. Quite a similar pattern. Spent a lot of time consolidating after a nice long uptrend. Clear level here, very clear level here at 42. I've actually been long of this one and have been very patient. It didn't seem to be doing anything for ages. Finally, yesterday we got a break above that 42 level. Similarly, we're looking at about a 2 to 3 Rand range on RMI. So a short-term move to 44, 45 Rand, as long as the market allows it, is likely. So we had some news out of Impalas this morning. Saying that there's possibly a 15% export levy on unbeneficiated PGM. I'm not 100% sure what unbeneficiated PGM means. I think hopefully we'll get some more clarity throughout the day. But if we look at Impalas, we actually had this. Zoom out a little bit. I think we showed this the other day where it was breaking out over here. Which date was this? On the 22nd, we're showing it was breaking out of this bottoming formation, but two days later, it was back below the level, and it just shows you need to be out, especially in stocks that are in a downtrend and you're playing for the reversal. If it fails, you just need to be out as quick as possible. Right now, we're going back down. I'm not sure how the market's going to take this news this morning, but we're pretty close to testing this 72 level on the downside. A break below that could send us back down to new lows in Impalas. So we'll keep an eye out for that level. And then the last one I was going to show today is Steinhoff. Steinhoff obviously is old hat, so I'm sure you're all aware of what's going on here technically. But it's been a little bit of I guess a frustrating trade, because we had this nice breakout to new all-time highs at 60 or just above 60. And then we failed that a couple of days later, trading below, but it doesn't really trade much below. It sort of hangs around just below 60. Yesterday we got through 60 again and failed, closed just below 60. So fiddling around at that level. If we bring it down to a 30-minute chart, we can see it actually hasn't broken down on the 30-minute. We had a short-term breakout on this 30-minute at about the 59.50 level. It held that and reversed yesterday. Obviously, we came off a little bit at the end, like most of the stocks in our market. If we can get a reversal, we're really looking for a reversal in the near term above the 60 level. I think if we can get a nice clear, maybe we can look at it on the 30-minute chart. If we can get a nice clear close above 60, then that might be the signal to get it going again. Anyway, we're watching this level closely, because there could be an explosive move higher. And that's all for today, guys. Good luck trading.